I wonder. Boom, 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 boom. Boom, 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 boom. I'm just setting up a couple of things, waiting for people to get on. If you have questions, feel free to post in the chat. The channel. Just setting it up. I am boom, 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 boom. Got one last thing to set up, and then I will get into some of this stuff. Boom. All right. Well, I am going to get into my process of what I look at, what I look for. I know a lot of you guys are going to watch this on a replay, so I'll try to answer some of the questions that you guys had through the week in here that I remember. If I can't remember it, sorry, but you can ask me on the live stream during the week also. I'm just setting up one last thing so I can see the live chat. So I can see a live chat as it goes on. All right, what do we got going on here today? All right, so basically every weekend I go over a list of stocks. I set alerts and things like that. Some of you guys had just basic questions about stock options. Basically, each contract of an option represents 100 shares that you're willing to buy at that price. And this is what an options chain looks like. Tesla's stock is somewhere between 320 and 322.50. That's why the color is here. These are in the money. These are in the money. These are one notch out, in the money, one notch out. So when people say at the money, they're talking this. In the money, you're buying these. Out of the money, you're buying out of the money. Um, so yeah, just quick thing. You buy one contract. It says $8. It's really $800. Um, yeah, and it represents 100 shares. And you're paying a premium. And basically, if this is a call, just to keep it simple, 940, 325, you're basically willing to pay 325 a share when this expires next week, but you're paying a premium of $9.40, which means your break even is this plus $9.30, brings you to $334.40 would be your break even. Anything below that, you are losing money. Let me just. So that's basically how the options chain works. I do not, for the most part, buy premium. I sell premium, and I primarily sell puts. The reason I do that is if you sell calls, just an example, say I sold this call to you and I collected $10 in premium, my exposure is basically limitless. Tesla has good news. Tesla goes to $400. I am going to owe a lot of freaking money because I'm going to owe 322 all the way to 400. Is about $78. So this, I collected $10, but now I am underwater. The difference between that and $77. So I would be down $67. Yes, it's kind of, people claim, oh, well, what if the stock drops? I only do this on stocks that I don't mind owning. So say I really like Tesla. Well, maybe I sell a put at 310, I collect $6. If I get put the stock, I'm essentially buying it at 304. And being that we're up, the stock can even dip a little bit and you still make money. That's why I like selling premium more than buying it, because you don't actually have to be 100% correct. You could be wrong and still be right. Also, you're not going to lose your account. People that you see on Twitter buying options, the options go to zero and you're left with nothing. I'm not left with nothing. I'm left with stock. And then what I do is, if I'm given the stock, say in this example, I sold at $6, I'm forced to buy the stock at 304. I can turn around and sell calls against that the next week and continue to collect premium until the stock, one, either goes up, or if it keeps going down, I can kind of keep selling premium at a level that I would still be profitable at to kind of trade myself out of the trade. But remember, you got into this because you like Tesla, not because of anything else. So at the bare minimum, if Tesla does drop $50, it was something that you wanted to own in the first place. You know, what up, Ray? If you have questions, feel free to just throw it out there. So, you know, if your thesis changed though, and you are underwater, that's another story, because now you're underwater and your thesis changed. So you might just say, hey, I'm out of this thing. Yo, what up, Corey? What up? What up? Feel free to ask any questions. I'm just kind of explaining the basics of what I do before I even get into how I find anything. So I'm all about collecting the premium. I prefer also to collect premium on red days. I basically buy on pullbacks, because if the stock I like is down on a pullback and I buy puts that are further down, I would have to be wrong even further but I've even gotten a better entry. I don't chase breakouts, you know, stocks breaking out, so be it. I missed it. It is what it is. I'm just here to collect premium week after week. It's basically like dividends, but better. A little bit more risk, but I guess in the dividend stock, you can obviously have the stock go down as well. But with this, you know, I just find companies that I don't mind owning that will give decent returns. You know, obviously Tesla is way the frig up. So, you know, that's why the premiums are high. You know, when there's volatility in the market, when the VIX is up, options premium is up. And that's when you want to be selling options. When the VIX gets really low, it gets iffy because you're not collecting as much money. In theory, also, there's theta. So like I can sell this, say I sell these at $6, Tesla can stay at 320. I collect all of $6. You know, Tesla can go down to 312. I still collect all of my $6. Even if Tesla goes down to 307.50, I only lose $2.50. I still made $3.50. So you could be wrong and still be right here. And that's why I tell people, if you're going to get into options, you get into cash secured puts first, because it gets your feet in the door, acknowledging what the hell you're doing. Two, the worst case scenario is you start accumulating a stock position at a lower price on stocks that you want to own, and you start building a stock portfolio. And like I said, if you're given the stock, the next week you would turn around and you would sell out of the money calls. You know, argument's sake, say last week I got put the stock at 330. I'm down a little bit. Well, Monday morning I'm gonna sell calls back at 330 out of the money, and I'll collect $7 more, $750. So basically, if this stock goes down $750 more, I'm still at break even with this because I've collected the premium. So you just keep collecting the premium on the way. The strategy is actually called the wheel strategy. It's not something I made up. You know, if you want to look, it's called the wheel strategy. It's basically the process of selling puts over and over and over until you're given the stock, and then you basically sell calls. And the idea is to just keep on collecting premium. The one way you can get stuck hard. What up, BKT? C. The one way you get stuck hard is, argument's sake, say you sold NU puts up here, and now you dropped, what is that, like 15% real quick. Actually, I'm gonna give you a real life example. So say you sold puts at HIMS when you were up here, and now you're giving the stock at $28, and now you're sitting here at 19. You are going to lose. There's two things you could do here. I'll explain them because a couple things you could do here. None that are great. I can tell you that right now. But this is why you don't buy at the top. So basically, here's what the options chain looks like. Let me see if I can even bring it up. Actually, I could probably bring it up. Sometimes they fuck the data up. So say I sold So here's HIMS $28 puts. Say I turned around and sold these bad boys at $2 on the 13th. Well, now they're worth $8.40. You are in the hole. Right now, you're in the hole about $6.50. Next week, when you go to sell the calls, when you're put to it, if you look at the options chain, $20 calls is only $1. That's nowhere near the $6 that you're down. So an example like this is where you can completely get smoked. That's why you do not chase stocks that are running up. You know, bad piece of news comes out, and that's why you still have to chart and look at evaluations and things like that, because you can get freaking smoked out, and then you're stuck holding HIMS down $5, which in HIMS land, HIMS has to go up 25% for you to break even. Obviously now there's a lot of volatility, so you could probably sell. Dude, my computer's just glitching. What was that? So like what you would have to do is you'd have to sell further out of the money because there's still volatility in the market. You would sell like $23 calls for probably 50 cents and pray HIMS bounces. But if your thesis was HIMS is great, then you're fine. If your thesis has changed, because now Amazon is coming out and going to compete with HIMS, that's what caused this drop. If that worries you, then you're out. Me personally, I sold 21.5 puts, and then I sold 19.5 puts. So my 21.5 puts, just for example, and if you have questions, feel free to ask. My 19.5 puts are only down $65, and that doesn't worry me one bit. It cost me $1, which means I'm willing to buy HIMS at $18.50, and my 21.5 puts are down. They are down. Oh man, why are they down? They're down $2. But I don't know if that's a spread issue, because when we closed, the bids might have been pulled. They should be down about $1.50-ish. Either way, so say they're down $2. I also collected $1 from them, so my average buy on 2150s is $20.50. So I'm fine adding in this area. I am perfectly fine. We were just way up. I don't think Amazon's going to mess with it, because got to think, Amazon decided to compete with Spotify. Spotify's at all-time highs. They decided to compete with Netflix with streaming. Netflix is at all-time highs. If you want personalized treatment and you want to be higher level, you go with HIMS. And I think HIMS is going to win overall. And this isn't buying advice. This is just, I think the reaction is overdone. Basically, we've dropped a ton. I just think it's overdone. And I think overall, HIMS is going to win. I don't even know when Amazon's actually rolling the thing out. I meant to look this weekend. So I'm actually going to dig into this weekend. But anyways, that's the gist on the wheel strategy. And then things that I look at, I use this tool for a lot. This is like a game changer. It's Market Smith. So if you don't know, I only use the Minervini scans. If you don't know who Mark is, you should probably look him up. I don't pay for any of his services. He's got like a $5,000 a year picking service or something like that. Oh, this coffee's so good. I don't pay for it, but his strategies, his mindset on what he buys and things like that is really awesome. It basically stops you from buying the knives, the falling knives. He only buys companies that are kind of doing well and basing ready for another leg up. And these scans kind of provide it. When he does it, he's looking for 5 months, and I sort by volume in dollars, the average volume in dollars. I'm not looking for some pump. Come on, sort this, please. No idea what that just sorted. There we go. And then obviously this is the manual process. I mean, it says there's 910. That's because we're in like a crazy bull market, I guess you'd call it. But it's looking for trending stocks. Like, you know, this would be the perfect base. And then you can see when it breaks over the line, he is a buyer, is kind of how his thing works. Obviously, he's got his own, he doesn't lay everything out in the scanner. This scanner actually goes automated where you could make it rotate. You just hit the play button, and I'll just sit here drinking my coffee. And when I see a chart I like, there's a pause button. It's right behind my freaking camera. Let me pause button. And when I find a chart I like, I just hit the pause button. And that's pretty much how I look at the charts. I basically have my coffee and let this thing just run. And like, for argument's sake, Costco. Like, would I buy Costco up here? Probably not. But you kind of have the pop and you have it coming back to the trend. Like, that's something I might look if we weren't up from $500. You know, also these charts, they do the cup and handles, which is nice. The flat bases, you know, you have earnings per share down here when the next earnings is out. Like, I just find this tool to be very useful. A lot of people use it. The only issue with the 5 months that I find is typically you are getting in late, and I'm willing to be a little bit more risky. So that's why I typically do the 1 in 4 months. Just being honest. But you could see any of the ones that get on the 5 month scanner start here. And this is what my Saturday morning looks like. I don't know why it didn't start from the top. But, you know, like I try to explain to people, there's a lot of work. Bob is very, very interesting, by the way. There's a lot of work that goes into investing. It's not just hitting the buttons. It's not just, you know, Saturday morning, I got the kitties. So yeah, so I just kind of let this scroll for the most part until I find a couple charts I like, and then I put it on TradingView. And that's an exciting morning for me because I'll find something pretty good normally. You know, you got EPS right here, CC. There's a lot of information here that you can definitely. You know what's interesting? Energy. Another energy stock. I like Oxy. I know Buffett keeps buying Oxy, and I feel like it's freaking due. Boom. So yeah, this is primarily what my Saturday morning looks like. I basically run through all of these. That's a nice bull flag. That's a nice bull flag. UNFI. I'm going to put that on my chart later on. So I basically run, I'm not going to do them all now, and then I'll run through the 1 to 4 months, which is down here. I'm going to have to scroll back up. It's kind of delayed because I think I'm streaming and everything else. The freaking resources on this is crazy. Crazy amount of resources being used. I like to sort this. Let me just look at a couple of the big volume. All right, here we go. As you can see, some of the stocks repeat themselves. You have Tesla back on here, Baba back on here. But these are now the ones that have passed the 1 month, and it's probably, you're going to probably be able to see more of a base. You know, you're going to get more of an uptrend. Now that it's 1 to 4 months, the uptrend isn't here anymore. It's now started to really get going out. You know, prime example, Corey, like here's Bristol Myers. People are trying to catch the bottom on Bristol Myers, probably a ton. Catching it, trying to catch it, trying to catch it. There's no reason to catch it until it comes up into a new stage and then bases. And that's what kind of the scanner looks for. I'm sure that this was on the 1 month, probably right around here. It was on the 1 month scanner. And then, you know, I'm like, okay, like we're out of the bottom, trend change, we're basing. I might sell puts on this, you know, depending on what the premiums look like, you know, or maybe I buy a couple shares of this. You know, the good thing, I want to say the good thing about selling premium, Corey, is you don't end up with nothing. I don't know if I was talking before, but you don't end up with nothing. So like, you know, you buy prop firm accounts, you blow it, you can end up with nothing. You buy stock options, like you see on Twitter, like 1,000% gainers, they can become nothing. So you're left with nothing. And that's how you people blow accounts, is they're left with nothing. When you sell puts, you've collected, so say the stock was at 60 bucks, like say for argument's sake, you got in at $50 and you sold $48 puts. Well, you sold 48 and you collected maybe 50 cents of premium. So you bought this stock at $47.50. You know, you're buying at a discount because and also you're willing to hold, or it goes up and you've collected the premium. You know, either way you would have won. But say it does go back down. The worst case scenario is you have the stock. You don't go to zero. You know, now you own the stock and this is a stock that you wanted to own. And that's what it's about. You got to be willing to take ownership of the stock. So that's why I put together a list on TradingView of stocks that I'm willing to own. You know, I'm willing to own it. I mean, that was pretty, see, like Lowe's, there's a cup and handle scanner here. I mean, these are pretty nice. Cup, handle, breakout, cup, handle, breakout. You're not going to become a gazillionaire doing this. This is, what up, Ace? You know, it's all about compounding. So if you don't know about compounding, the idea is if you start off with 100 and you make 10, now you got 110, and then you make 10% off that, and then 10%. And then the next thing you know, your 10% is worth 20. And then your 10% is worth 30. And you just keep compounding gains where, you know, you're not doing this to make a ton of money today. You're doing this to make a ton of money in 3 years from now. You know, when you're a portfolio, I like to see growth. I like to see revenue growth mostly. I like to see charts that are good. And I don't typically hop on the hottest item unless I got in super early. Like, this is the hottest item. I'm not jumping in on this. I knew about this company for ages too. I have it on my list. I wasn't into dollar cost averaging down and down and down and down and down. I think Bill Gates is part of this actually. But it was interesting that they had EPS growth, but I'm just not into, fundamentally, this company sucks. People are buying this company in hopes that they do something for the future. And that's an entirely different play. Like, you know, I run stock option scanners that pick up large volume of buys. And if I do an stock option play off that, that's completely different than this. That is, let me see if I can find that real fast. I'll show you an example. I think it was, so, oh, I'll show you. I'm just pulling up the data right now. So I have this running at all times as well. Feel free to ask questions. Sure. What up, David? So this is an entirely different type of play. And I don't mean to jump around. I only jump around because it was kind of like you brought up, what do I check? So one type of option play is I run this scanner all day, and then I look for something like this. Somebody came in and demolished December 13th, $200 calls, and they bought, you know, 500K, 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 500K. I mean, they lit this thing the fuck up. So I follow this guy. He's some type of big investor. He's somebody big. Is he going to win? I would say these guys win like 85% of the time. When they win, it's usually not 30%. It's usually something big. I've seen them take $2 calls to like $26 on millions and millions of dollars. Yeah, so I'll buy options on something like this. And then I might even sell puts and say, hey, December 13th, TSM is at 190 right now, right? So TSM is at 190. Let me just pull up TSM and I'll show you how I work that as well. TSM. Trading, I'll go to December 13th. And I'll say, hey, so I play it two ways. As you can see, bought, it's like I might buy the 200s, but then I'll also sell the 215. So I followed them, but I also saved some premium by selling further out of the money calls. So I create a vertical spread and don't follow them exactly. Or what you could do is you could say, hey, TSM, they think it's going to go up. I'm going to sell 185 puts, collect $715. If these guys are right, I collect $715. If they're wrong, I maybe put a stop on this at $10. So I'll lose $300 a contract. But, that's where I'm at with that. Do you do options on future bonds markets? No. Ace. Yeah, I would say the guys that buy big money like that are right. Their percentage of being right, I want to say the percentage of being right is probably like 80%. But when they're right, it's ungodly. Like I saw them take LMT from $2 to $26 just recently. I followed. They bought LMT right after earnings. I think they bought, where like people were probably like, "Oh, this is up a lot. I'm not following that." I followed them, and it just kept going. I mean, I sold. I want to say I sold like here. I was like, "Fuck that. I'm out." I mean, I know somebody that followed and they sold like up here and made a ton of money, like 10x their money, and probably made like $35,000-$40,000 on like a $3,000 investment. But they hit that, and then they might lose the next one. But who cares? You just hit for a 10xer. So what's it matter if you lose the next one or the one after that? They don't play for 30% gains. So you just got to know if you're following, you're typically following for a larger move to happen. And if it comes back a little bit, it comes back. And if you lose, you lose. It's an overall, I look at the yearly gain on it. But I didn't mean to go too far in the weeds with that. That's something completely different. Let me get this back on track here. So anyways, what I look for over here, I like companies that have revenues that are growing. And I look at some value plays, like Pepsi is getting interesting. Pepsi has a dividend also. So not only can you get Pepsi at a low, like, Pepsi's growing freaking small, but you could probably get Pepsi somewhere in the 150s, and you'll probably get appreciation of the stock, and you probably get a dividend as well. What's the Pepsi dividend? PEV. What's the dividend? What are they giving out? So they give out a quarterly dividend of $1.36. So annually they give you 3.42%, but you could probably get 10% appreciation on the stock from down here. If you wanted to leg in, you could, let me just look what next. If you wanted to, I'm not saying that this is not advice, but for argument's sake, you could sell one, that collects you about 1% of your money in a week. So you'll collect 1% income in a week. If the stock stays above 157.50, you made 1% on your money in 1 week. If you did 1% of your money every week, it's 52% a year, but also there was compounding in there. So you would obviously make, I don't know, maybe 65% on your money. If you get given the stock, technically you would buy the stock around 156. and then you would be in for the dividend. And if the stock comes up a little bit, say the stock bounces to 160, you can then start selling calls against the stock to start collecting premium. This isn't a make money. This isn't make a large amount of money stock play. This is, you're collecting a dividend, you're selling premium against it, and it's just a small little money maker that can probably continue making you money through the year. You know, Pepsi's not going anywhere. Pepsi's not going to $400. It's probably going to trade within, you know, this area for a very long time. And it is what it is. But you collect a dividend if you're given the stock, and then you can just keep selling calls against it. So yeah, I basically look for companies that are growing, is what, you know, growth companies, things like this. I also like companies like PayPal that were just demolished. You know, PayPal's not going anywhere. You know, PayPal was definitely not going anywhere. You could see it kind of based, you know, you want to see this long base. That to me is, hey, we can keep selling premium in this area. And if I'm given the stock, I don't mind, because as long as we hold probably 55, we're good. And I don't think we're going lower. You know, I bought contracts. I bought long-term PayPal contracts, like $59, and ended up selling them. Like, I want to say I sold them probably up here in the 74 range. I definitely didn't hold into the 80s. But I love leaps on companies like this. Also, I'm going to show you how I finance leaps. So say, for argument's sake, I'm trying to think of a company that's freaking beaten down. I'll take Celsius, for example. I'm starting to fall out of love with Celsius, but I'll show you something you could do. So say you like Celsius. Celsius is beaten down. Say I think they're going to turn this shit around. So you can finance options. Everything's slow because I'm streaming. I got a ton of shit up. So you can finance. So say you don't mind owning Celsius, and you're like, hey, I think Celsius is going to make a comeback. Well, this is out till June, so you're going to buy some long-term options here. You're going to basically sell $20. So basically Celsius has to drop $5, which is about 20%, for you to even be in the money. And then it's going to have to drop another 10% from that, or even more than 10% from that, for you to break even on this. So you would sell this for two, call it. I got the kids this morning. I let my wife sleep, so they're like right outside my office door. But all right, so say you like Celsius long term, you could sell the puts at 220, and you could buy a little bit out of the money. You could buy 30s. So net, you'll collect 220, and then this will cost you, call it 450, right? Actually, you probably get this in the middle as 250. This cost you 450. This is going to cost you $2, right? Then you turn around and sell 40s. So this cost you $2. Now you're selling 40s for, I don't know, call it 225. Now you've sold two 250s, and you sold this for 225. So you collected $4.75, and then you bought this for 450. So basically you've collected 25 cents of premium, right? You got 25 cents of premium. So this trade essentially didn't cost you anything. If Celsius stays above $20 by June 25th, you've collected 25 cents of premium. So you're up. You're up a small amount, better than being down. Every penny that Celsius trades above $30, you'll start earning money. So say you just did this with one contract. The most you can make is $1,000, because basically the difference, you'll be up $10 here, right? Hold on. This fucks my math up so much. This is going to be worth $10. Nope, you're going to be up more. So if you bought 30s, sold 40s, and say the stock is at $41, this vertical spread is going to be worth $10. Plus you sold $2 of premium, you'll be up $1,250. But you're capped at $40. If Celsius makes a comeback and goes up to $60, you make no more money than the $10 here and the premium you sold. So the most you can make is to $42.50. After $42.50, your gains just doesn't matter anymore. And that's it. You just kind of sit on it and you wait till it expires, or you can sell it. You'll take a little bit of a hit because there'll be premium built into some of these things. You know, there might still be value here, even if it's small, but either way, sometimes it's worth just to get out of it. But that's the max gain, is 12.25. So you can finance options in that way, where you could sell a put and then you could do a vertical. I like that on the further end. The only issues that come is capital is definitely being held there in this position. You're not just selling premium. You know, if you just sold premium here, you just collect 220, and if the stock, say the stock in this example ends at 22.50, well, you tied up a good amount of money for 216 days, and all you did was collect $2.50. Oh, no, you would have collected 25 cents, because you would have bought this vertical and you financed it, and you basically made almost no money, and you tied up money for 216 days. If it goes below, you would eventually own Celsius stock. Your break even is about $19.75. And then you would start owning Celsius stock. But I only do things like this when the stock is completely beaten down, because the odds, if you like the stock is good, it's growing, the odds are that it will come back. But yeah, that is collecting premium to finance a vertical. I only do that in some cases. I prefer selling short dated premium, because the theta, which is what determines how fast the options decay at, is the highest the closest it is to expiration. So that's why I prefer selling next week or the week after options. The furthest I'll go out is 1 month, and that's kind of what I stick at. 1 month closer, selling put options, and just keep collecting premium. I'm just trying to see where else. This is what I use. Like I said, I'll sit here and watch all these charts while I have my coffee, and because it's on auto, I don't have to touch any buttons, and I just watch as we go through. My favorite, like I said, is the 1 to 4 months. I'll check out the 1 month to see if anything interesting is there, but 1 to 4 months is usually my bread and butter. Let me see if I find one that's just freaking gangster in here. I'll let it run for just a little bit and see what we get. But yeah, so this is what Saturday morning looks like for me. I usually sit here for about an hour. I'll run through 1 month. I'll run through 4 months. I might peak at 5 just to look. Maybe I look at flat bases and stuff like that. I'll look at some Trend Spider stuff. You know, I'm looking for something like this. I'm looking for something like this. We were in a downtrend. We've broken the downtrend. You kind of have a channel here. You're basing, and now you're starting to break out of the base. This is interesting to me. I have no freaking idea what Kenvu is. It's a cosmetics company. Being that it's a cosmetics company, man, kids on the weekend, they are, I'm like, dude, I just used to just watch some cartoons in the morning. Why can't you just watch some cartoons? So anyways, back to this. So I'm going to do some research. I would research this and kind of see if they have, you know, first of all, what Kenvu is. It was actually a healthcare division of Johnson & Johnson. I would want to see if any streamers or TikTok people are promoting it. Maybe look at Google Trends for Kenvu. Google Trends. So I go to Google Trends. I type in Kenvu. Let's see what Google Trends brings up. Nothing. That might not be what people are searching. Kenvu products. Let's see what their product line is. Oh, they own Aveeno. Aveeno Nutri. Oh, I see what they own. Okay. This is interesting. No. All right. Charts interesting. I do a little quick looking into. I always bring up Google Trends, by the way, because if you get a company where you see the Google Trends are starting to come up, that means people are showing some real freaking interest in the company. And that is usually a leading indicator to stock price, because you get people searching for it. And once people are searching for it, it means they're buying it, but it hasn't reflected yet in their earnings, which then reflects in their earnings maybe like a month or so later and in their guidance. And that's what you want to look for. Those are like bangers. You get early on a trend and you see that people are searching for it or people that are buying it, you could ride this banger. You know, that's something that you would buy longer term options on, maybe purchase stock and sell puts and really go hard in. When I go hard in a company, when I go freaking big, when I make bigger bets, I'll sell puts, I'll buy stock, and I will buy options. I will buy a set of all three. The reason being that I'm buying a set of all three is I think if I'm wrong a little bit, selling the puts will collect premium. So at least it will lighten the blow up because I'll collect some type of premium. I will own the stock, and maybe the stock doesn't go anywhere. Maybe it goes down a little bit or up a little bit, but the stock gives me the ability to sell calls against it if it doesn't go anywhere. And I'm like, hey, you know what? Let me start financing some calls. And then I sell longer term puts either in a vertical or just buy calls outright if the premium's not high. Because maybe they don't know about it yet. Maybe I'm seeing a trend that other people are seeing, but the major market hasn't seen it yet. And that, when you kind of combine it, you can make a solid gain. And that's what I do see. So I'm looking at CCJ. This is interesting. So I want to dig into their earnings. They had earnings. They're part of the nuclear uranium thing, and I guess they want to buy uranium. They want to build these nuclear plants to do these AI facilities. So I know one of them was shot down recently, but I don't know if it has to move. I got to dig into it. But uranium plays might be something that can start to take off and run for years. Basically, if they start building these plants, these uranium companies are going to start going bananas for a long time. I think it's going to be just a grind up, and it's something I want to be part of. I was hoping CCJ was going to come back to like mid 40s. It did not. I'm not saying I'm buying it here, but I'm saying I'm super interested and want to look at their recent earnings report. These are all, so this is the difference between prop firms and investing in stocks, and why I like stocks a little bit better is there's storylines. There's storylines going on. I've owned this stock recently. Holy shit, did that pop? Oh, it had earnings. This is definitely on my radar. I bought this because of this base. I liked it. I want to see what the deal is with Lunar. Yeah. I sold right before earnings and I stopped looking at it. I didn't want to hold into earnings. I'm something like that I'm not 100% sure about. I don't hold through earnings. The most I do is I'll sell puts into earnings to collect the premium, because premium is going to be high right before earnings. Man, that's a nice fucking breakout right there. But yeah, this is what my Saturday morning looks like. And I know it's different than what you see Monday through Friday, having fun and everything. But this is what pays the bills, big time. So, you got to put time and effort into it. I also look at this stuff after hours, sometimes during the week, but I definitely do it on the weekends. And then what I'll do is, I'll come here. Maybe I want to see what their earnings deal was, but argument's sake, I'll just start putting alerts where not necessarily going to buy, but I want to know when we come down here. I want to know Man, fucking lemonade. I'm watching this. So this is that bank that Buffett's involved in. It's like a melee of banks. I am super interested in buying this on the downturn. They had earnings. They just dropped off earnings. I want to see what it does. I want to see what it does. I got to look at their earnings a little bit and see what the deal is. Do you guys have questions who are watching? Just put questions in the chat if you have questions about anything I've talked about. You know, if you have questions, throw it in the chat. You can ask anything. If you don't know anything, ask it. It could be anything. It could be anything. I'm resting my hand on my water bottle, but it doesn't show the water bottle. Yeah, feel free to ask. One of the biggest questions people ask is, how much money do I need to start doing this? The answer is, you need enough money that when you sell that put, you have the cash in your account to buy it. Some people will tell you that if you use a margin account, you only need half the cash. But just remember, if the stock goes down a certain amount, you could get wiped out. You know, that is the risk. You know, like, just argument's sake, say you have $10,000, you buy $100 stock with you sell puts, it goes down to 50, you are left with zero. They will liquidate your account. While if you have the cash, you buy the stock, you own the stock. The stock would have to go to zero for you to be wiped out. On the flip side, though, do you think the stock's going to go down 50%? Plus you're selling premium against it? The odds are the stock would have to go down to like $30 because you're going to be selling premium against it and calls against it. Me personally, I have a margin account. I'm okay with, I don't think, you know, I would rather the extra buying power. But what I tell new people are, have the cash in your account, get a cash account, do it that way. Once you see that you're profitable and you understand everything and you've been doing this and you have your feet wet and you know you're making money, you then can switch the account from a cash account to a margin account. And then now you have margin to play with. So now your $10,000 of buying becomes whatever the margin rate, whatever, you know, $20,000 or $40,000, whatever it is, depending on whoever you're with. You know, or 10,000 becomes $15,000 worth of buying. So depending on what the deal is, I have multiple accounts. I have some cash accounts and I have a margin account. So I play around with a little bit of each, and it is what it is. Oh, so that's how my Saturdays are, pretty much, without the beginning of the video kind of explaining what everything is. I roll through Market Smith. I roll through, here's Trend Spider. You know, you can see fundamentals. I focus on revenue. You can see each quarter, revenue is increasing. I freaking love revenue increasing each quarter. I love, you know what I love even more? Revenue increasing each quarter and stock price going down. Oh man. Sometimes when I see revenue increasing and stock price going down and I don't see any red flags, I have to go to the hospital because I've been hard for 4 hours. And I'm just like, I can't wait till Monday to just dive in. Yeah, like Hims HIMS was a no-brainer. But if you follow the scans that I follow, you would have bought HIMS right here. Basically, you would have waited until it broke the downtrend and it would have popped up on those scans and Market Smith right here. And you would be buying HIMS at $8. Would you have held to $30? Probably not. But you would have probably bought here and then you probably would have probably sold in the 15 range. And then HIMS would have been on your radar. You know, it drops. Maybe you take another shot at it. Maybe you sell some puts against it. I don't know why it dropped. But yeah, you know, or you say, hey, when HIMS hits the 200, I'm going to buy. So you lose out on all this, comes down, hits the 200, and then you buy HIMS again. This whole time, revenue is increasing every quarter, and that's really what you want to be looking at. Actually, I want to look at this. Why did Crocs drop? I mean, they had earnings. I'm just wondering if revenue just plummeted or something. Oh, man. I drink my coffee black. It's so good. Bum, 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 bum. Why is this Shiznik not working in here? Why are we taking forever here? Oh, you know why? I know why. It auto-logged me out. So then I don't know what the deal is with HIMS. Not HIMS, Crocs. Crocs is freaking oversold. What's interesting is PE ratio. Crocs has been trading mostly around, I guess, 11, 10, 11, 10, 11 the whole time. And now we're down to 7. Crocs is considered cheap here. I'm actually pretty interested in Crocs down here. I want to see why it dropped. I know it was earnings related. Let's see, interest over the past 12 months. Crocs is definitely on Google Trends trending lower. Dude, they have Happy Meal Crocs. What the frig is Happy Meal Crocs? What is Happy Meal Crocs? Dude, I guess Crocs did some type of Happy Meal Crocs. I don't know if it was a keychain or what. But yeah. I just think we're getting value here. This is starting to look like value to me. As you guys, you know, so people that I trade with that talk about this, like I shoot ideas off of them. They shoot ideas off me. I'm in a text group. Like it's hard to do this all by yourself. You can't look at all the stocks in the market by yourself. You can have scanners. You know, I have scanners. I have stocks I like, but you're going to miss a lot of gems because unless you're doing this, like there's guys that I know that during the day, all they do is research. They don't give a shit what their stocks are doing during the day. All they're doing is research. Research all day, just trying to find the next company. And, you know, they'll check the stock prices here and there, but for the most part, they're just looking for the next play. And that's it, because they're not trading intraday. You know, they're just investing and doing research. I'm looking at Crocs. I just want to see. So you can collect 1% of your money. Actually, it's a little bit more. It's like 1.4% of your money. What about like December's? So this is why I like this better than, you know, like if I like Crocs right here, you know, I could sell 95s, collect $3. That's $3. That's $300 on $9,500. So you're collecting about 3% of your money in a month. If Crocs is over $95, if it's not, basically you're willing to buy Crocs at $92. You know, but that's 3% of your money, right? You basically get 1% for 96s next week. And you could do that 1, 2, 3, 4, 5 times. You know, 5, you get $5. And that's why I sell weeks, the weeks out, not too much further. But obviously it's safer to buy the further. It gives you some more time, whatever you're more comfortable with. All right. So I went over what stock options are. Hold on, this fucking heater is just blowing on me. Oh, all right. So this is what I went over in this video. If you have questions, comment in the chat. I went over what stock options are, my main strategy, which is the wheel strategy, how to finance options for other options. I went over how I find most of my stuff, what I look for. I went over that option scanner that I use. I went over that, where I follow massive options flow. Yeah, I mean, I use MarketSmith, TrendSpider, TradingView. That's pretty much all the tools. Some guys use FinViz. FinViz is a good tool. What else is there? You know, I suggest making a list of stocks you like. You know, I have them all here. You know, got to remember, guys, this is different than prop firms. A lot of you guys that are on here are probably, you know, prop firm traders. Prop firm traders, you're just looking at what's going on. You're basically playing the chart, and you're basically just playing 1 to like maybe 15-minute candles. You know, and the action is quick. You're either making a lot, losing a lot, whatever it is, fast. This is the long game. This is to make money for a while. This is less stress. At least for me, the stress is less. And the idea is, you know, you're building a portfolio. Like you're investing money, but also this could be your retirement. You know, this could be that big chunk of money you just have waiting for you. You know, what I do is I trade my E-Trade account that you see, and then I'll pull money out of there and put it in a different account and do some like longer term put selling or options buying, and like stuff that I do not even want to look at on the daily basis. It's just, you know, I'll buy stock in that account. I'll sell premium further out. And basically it's just money that isn't supposed to be touched. And that's why I have a whole separate account outside of my E-Trade account. You know, that's the ultra conservative, playing the long game. Like in that account, I'll probably buy Pepsi. I'll probably sell Pepsi puts where we're at, and I'll probably sell Pepsi puts until I get given the stock, and then maybe ride Pepsi up like 5-10% with the stock, and maybe I'll collect a dividend or 2 or 3. And you know, that's what type of plays go on in that account. While you know, my other account is a little bit more aggressive. But yeah, I mean, that's pretty much it. I mean, I went over pretty much everything that, not everything I know, but I guess a lot to digest for anybody that's new. And then I would say for you to ask questions either on the live stream. If you guys, anybody new here doesn't know, we stream every day. You can jump on the live stream 10:30 to noon, 2 to 4:30, jump on, ask questions. You can comment on the video. I'll get back to you. You can ask in the Discord. The link is in the description below. I like asking in the Discord because I can do screenshots and stuff like that and post it. I can't do screenshots on YouTube. But yeah, I mean, that's pretty much the gist of it. And listen, I know not everybody has money to start doing this, but what I would say is maybe you paper trade it, you know, in a sim account to learn the ropes. And, you know, you should start saving. I don't know how old everybody is, but you should start saving for retirement, because, you know, if you're in your 20s or early 30s, like, you should start putting a couple bucks away. And a couple bucks becomes a lot of money 10 years, 15 years down the road. You know, if you're putting away a couple $100 here, a couple $100 there, you know, plus your compounding interest, like, you know, say you have a good year and you got 30% on your money. I mean, now the next year you got 30% more on that money, and now you're making interest on interest. You know, I'm not saying you get 30% years. I'm just saying, like, this year was a really good year. Like, you could have gotten 30% on your money. You know, would you have gotten 30% on your money, you know, in 2000, what was it, 21? Probably not, unless you shorted the market, you know, or 20, what did we go up now, 2022? No, unless you shorted the market. You know, just another thing to think about also is, let me take this off. You know, you should see where the market is. You know, am I putting on a lot of positions up here? No, I'm not. I'm in like 75% cash right now. You know, my exposure is completely reduced. I put on exposure on this drop, and I added, you know, I definitely played in here. But as we got closer to all-time highs, even up here, I started taking exposure off. You know, and then when we got the Trump pump, you know, I took a lot of exposure off. You know, what is the risk reward up here? You know, it's definitely less reward, a lot more risk. You know, I'm not saying we're going to come back down to 300, but, you know, maybe we come back down at 267. You know, maybe things come back 5%. I don't know. I honestly wouldn't be surprised if we got something like this, another major dip. What was that dip anyways? 140 points? What's 140 points bring you to? 338, you know. Who says we can't go to 400? You know, a lot of guys are calling for a stagnant couple of years where we don't go up, we don't go down, kind of. You know, look at what the Qs look like in previous years. You know, you're going up, but you're going up. You know, there's a whole time here for, you know, year, 2 years of just kind of sitting still. This is the COVID drop. COVID drop looks fucking small to the COVID pop. That was COVID drop. Obviously, percentage wise, it was big. You know, 237. I mean, you were down fucking, you know, what is that, 70 points? 80 points in a market that's only 240. Pretty, you know, 30% drop. But, you know, I would watch out what you're doing up here. I would be looking for pullbacks. You don't want to miss the boat, but at the same time, I'm not looking to pay at the top. And that's why I sell premium. So even if I'm wrong, I continue to collect. And yeah, that's pretty much it. You know, there's definitely some companies that are down. You know, companies that are down like Ulta that technically don't have anything to do with the Qs, you know, basically more retail, what their products are. You know, Lulu's another one. But, you know, you want to keep stuff on your, I gotta delete a bunch of these. There's some I'm completely done on. I'm completely over, you know, some of these, and you know, I'll relook at, and I want to add some. Man, I missed the boat on some of these. Dude, I had my kids' college fund in this, by the way. My kids' college fund was in shop in the 50s. And I literally just sold out. I think I sold some out at 107.50 and some at 11 or 12, somewhere around that. That was a massive fucking hit. My kids' college fund had shop, net. I think only shop and net. All right. So, man, this is pretty much what I do on a Saturday morning, sometimes Sunday morning. Just give me an overview, and then I'll read my text messages. I'll, you know, at some point today, I'll probably talk about it with some people. Twitter is a great place for information. Twitter for me is a net. So basically, I follow people that look at some fundamentals, some, you know, real investors. And then I don't follow them, but I see what they're talking about. And then I take those symbols and then I look at them myself. First, I look at the charts. Do I like the chart? If I don't like the chart, I'm not even going to fucking buy it. You know, if they were talking about a symbol and we're like this, I'm out. So I don't even need to do any research. But what up, sleeper? But now I have a batch of symbols. I'll look at those. I'll see what they're talking about. And then, you know, maybe I like one or two, and then I'll keep it on a watch list. And that's kind of the gist of like one other scanner. Like I got my Market Smith scanner, my Trend Spider scanner, and then I have my social media scanner where I scan what people are talking about. Because what people are talking about might catch fire, just like PLTR did. Like, you know, people start talking about it. And then, you know, oh man, I'm exhausted. how do you find small stocks? Through, I use Market Smith, Trend Spider, or just I see what people are talking about. I don't really play small stocks though. Like I'm not buying stocks that are like, I probably wouldn't buy anything that's not listed. Like I don't buy OTC stocks or anything like that. The smallest stocks that I would buy are stocks like SoFi, you know, where it's a real company. So also share price and market cap are two different things. Like you could have a stock trading at $10 that's worth more than a company trading at $200, because the one at $200 has less shares out there, and the one that's trading at $10 has a ton of shares out there. So it's market cap versus share price. But I tend to just, I don't buy a lot of smaller market cap stocks because I'm mostly looking to sell premium. But I did buy SoFi. But Weight Watchers might be interesting. I talked about this on another video. Riding into the end of the year, Weight Watchers might do the run. When I sell premium, it's usually next week or the following week. When I buy contracts, it's typically further than a month out, because I don't want to get theta. I don't want to get thetaed out where it decreases. So I'll buy from like a month all the way to a year out. And then sometimes I finance those that I buy with selling puts also. So I sold the puts, I collect premium, and then it allows me to buy those options at, you know, either a discount or at a wash. I actually did a whole example of that earlier in the video where I said I sold you could sell puts, you could buy, it was Celsius, you could sell $20 puts, buy $30 calls, and then sell $40 calls. So you sell puts on one side and then you do a vertical spread on the other side, and you would have collected 25 cents of premium. So it basically doesn't cost you anything. I got kiddos waiting for me to make pancakes and bacon. So I'm about to slam pistachio pancakes with some crisp ass bacon, maybe make some eggs over easy. So if you guys got questions, comment on the video, or even better, comment in the Discord. Because if you comment in the Discord, I can screenshot it. Like I can screenshot options chains and answer you correctly. So the Discord link's in the description. Just comment, just put your questions in there. I can do screenshots. I can make a short video and put it in there. But yeah, I'm sure I'm going to do one of these videos again on options because people are either missed it or have more questions. And yeah, Corey, the best thing I could say, if you're new, go get a sim account, man. Go get an options. Let me see. I'll just look right now. Options sim account. They got to have a free options account somewhere. Webull has one. Even if the data is delayed 15 minutes, it doesn't even matter because you're not buying for intraday. So I would say use Webull or use I don't look for the daily, David. I'm looking, like I tell everybody, you can have red days, you're going to have red weeks. You do not have red months. I've had loser days. I've had loser weeks, but at the end of the day, your monthly is what you're looking at. An average on day, I mean, if you watch, let me see if I can pull it up. I mean, you can see just on the thumbnails, you know, I'll make $2,000 in a day, and then I'll make $342, or I'm down. Some of these videos I'm down in, you know, I've lost $1,200 or I've lost $300, you know. Typically, I don't make a options update video if I didn't buy or sell anything, because there's nothing to update. Like, I'm not just going to make the video and say, hey, we're up today, or we're down today. Like, if I didn't make any trades, there's no reason to make a video about me not making trades. If you follow, you know if you're up or down. The process of me buying options. Yeah, I can do something. Yeah. Oh my God, my stomach is just rumbling. Yeah, I can make something like that. Like I said, guys, this is not buying weekly options to make 8,000% like you see on Twitter, because the odds are those guys are going to be, their accounts are going to be blown within a couple weeks, couple months, or by the year. And if the guy's telling you, like, it's just not true. You know, your goal is to make consistent money, and selling premium is, to me, is the best way to do it. You should look up the wheel strategy. That's what I use. I'm not the guy who made this strategy. I'm just explaining to you what I do. But yeah, there's 99.9% of the time is research, and that 0.1% is hitting the button to buy. Everything is research. Why I feel like prop firm world, it's like looking at the chart, clicking the button, you know, moving your stop loss, like doing all that. This is completely different. This is once you buy, you're basically sitting back and just waiting, because options decay, which is good for you because you sold them. So you want nothing to happen, or the stock go up, where it would bring the value of the put down, and then you collect more premium. But yeah. All right, guys. There's a lot in this video. For anybody that's new, I'm sure there's a lot in this video. Do I wait for huge pullbacks? No, not necessarily. I showed my market smith. I like stocks that have broke the downtrend and that are starting to trend back up, that are doing well. Revenues are increasing. Maybe the economic environment is a tailwind for them. You know, that's what I'm looking for. I'm looking for, you know, stuff like that. I'm not looking to catch falling knives. I'm not looking for, you know, I'm not looking for the next big thing. And I'm looking for companies that I don't mind owning, because you can get stuck with this stock. And when you get stuck with it, you don't want buyer's regret. You want to say, hey, you know what? PayPal was trading at $82 and I sold 75 puts. The stock dropped to 68. I'm underwater in these shares, but you know what? That's fine. That's where I wanted to own PayPal. And I think PayPal is going to come back within 3 months, and I'm going to make money on the shares, and we could sell some calls against it as well, and we can collect premium that way, and we're going to make, you know, some good money off of this. That's what you want to do. How do you know when to exit? When I'm happy with when I'm happy with what I made. You can ride like the 8-day moving average up, and as long as it stays above the 8, stay in the position. You want to see if environment things have turned. You know, like I sold D-Lo because it had earnings, and we just went from fucking 850. I sold at 1140. I'm fucking out. Like the stock is up, you know, 40%. I'm out. I'm happy. I can sleep at night saying I made 40% on that. You know, nobody went broke taking profits, you know? But yeah, if you follow like the 8, so I'll just pull up. You know, you could follow the 8. Some people follow the 34. You know, usually the 8 is good on power moves, I guess. You know, as you're trending up, see how like Tesla holds the 8 the whole time? The whole time we stay above the purple. And then once we go below, you're below. You know, it doesn't play true if you're in chop, but this is pretty much where you'd be adding the stock. You know, when you're looking to take profits, the stock is going up. So you'd be looking to take profits on the way up. And you just say, hey, listen, as long as it keeps holding the 8, I'm just going to stay in. I don't touch the SPY. The only time I'll touch the SPY is if I actually buy puts to hedge my actual portfolio. Oh. And usually I buy puts and I sell further out. I do like a put vertical. But I never sell calls if I don't own the stock, because you're asking to get slaughtered. Because if you sell calls and the stock continues to go up, you can take a fucking bath, because once you go in there, your position becomes a short position and then you get hammered. At least on the way down, you own the stock and you're okay owning the stock. It's something that you want to invest in long term. That's the wheel strategy is exactly what I'm talking about. I said it a bunch of times. I basically do the wheel strategy. I think that's the best strategy for anybody new to come in. And then, you know, I talked about how I not only use the wheel strategy, but this is options flow. Like I follow big options flow. So like somebody came in and fucking smashed TSM December 13th, 200 calls. I follow that guy. That guy I follow, and I piggyback his trade. So I do the wheel strategy on one end, and on the other end, I follow bigger investors. And I'll follow this guy, and if he loses, he loses. But over the course of the year, these guys make money. So I was just using this as an example. This position is actually down currently, and I don't care. If it goes to zero, it goes to zero. I've had this trading software since 2017. It's called Black Box. You can see it right here. I've had this since 2017. But yeah, it's not a guarantee that these guys make money, but the guy put in 1 million, 2 million, 3, 4, 5, $5.5 million. How you can see if he exits is you got to look to see if he exits. It'll be below the bid, and he sells that position. So this is like a whole nother. Most likely this guy did not get out of his position. No. You would see a bunch of BBs. See how it says above the ask? Above the ask sweep is that guy doesn't give a shit what he got filled at. He basically marketed in and said, just give me the fucking contracts. How much is this software? They run. I wasn't even going to go into this software on this chat, to be honest with you. They're running a deal. Hold on. Let me see what the fucking deal is. I'll be honest with you. If you are not trading, I would do the wheel strategy before you did this. How's that sound, guys? I would do the wheel strategy before you did this. Probably. Basically, they're doing a 32% off. They're doing 32% off. It's kind of what they do in meme coins. Oh, why? No, it's membership. It's definitely membership. I'm pulling it up. I'm trying to see the plans though. They don't. I just did get my discount, but I want it. Oh, here it is. I'm telling you, do the wheel strategy before you do this, guys. Do not put it like this. How does this sound? I'm an affiliate for this software, and I'm telling you not to use it. I'm telling you to go use the wheel strategy. How's that sound? I can easily tell you to use this right now. I'm telling you to do the wheel strategy. That's how much I can't be more honest by telling you to do the wheel strategy. Just, it doesn't, like, I'm telling you, don't buy it. Do not buy it. Do not buy it. Do not buy it. Do the wheel strategy. Make some money. And then after you're green and you're making money doing the wheel strategy and you are collecting premiums. Yeah, I did, Joe. The gist of the wheel strategy is you sell puts on stocks that you don't mind owning, and you collect the premium. And if you get given the stock, you then turn around and sell calls against it to collect premium. Yeah, that's fine, man. It's all good, Joe. It's all good. I'm here to help out. Otherwise, I wouldn't be here on Saturday morning. Believe me, I have 1,000 other things I could be doing. I'm here because I want to pass knowledge to you guys, and I don't charge anything for it. I'm just doing it because I think people should be informed about a lot of things. But yeah, like, I explained it, and if you want, there's definitely guys on YouTube that that do it as well, pretty well. You know, yeah, I said fuck it, I didn't watch it. But you know, when you're selling puts, you definitely want to see where the market is in general. You know, do I want to be buying stock when we're up here? Probably not. I want to see a sizable pullback to start getting in. And then you want to see where your stock is. You know, like, am I going to be buying, am I going to be selling puts when we're making all-time highs? Probably not. You know, I don't want to own Crocs. Even if I take a discount, I don't want to own Crocs at 154. You know, you want to make decisions based on the chart. Map trades, yeah, I don't know who Map trades is. Dude, I've been doing this. I've been doing options since 2017. Once you get into options, it's super fun. It's super fun. There's different storylines to talk. And then every once in a while, I just take a fucking balls out position where I'm like, I'm just buying calls. Hey, I don't give a shit. I'm just buying calls. And, you know, and you could bank huge. I've had days where I've woken up and I'm up, you know, just not recently, but it was like a month ago or something. FedEx. What the fuck did FedEx do? FedEx did something. Oh, I was in FedEx and this happened. What was that? Was that earnings? I don't know. I mean, like, I woke up, I was up like $7,500. I was, you know, it was awesome. It was just awesome. Feels like just the other day. It was actually in June. But yeah, I've woken up to massive gains. But the idea isn't for massive gains. The idea is for consistent base hits that allow you to take a shot for a big gain. And that's pretty much it. Buying contracts far out, I sell premium. So I sell contracts and I usually sell next week's. I sell next week's and as far as a month. If I buy contracts or I buy calls, I usually finance it by selling a further out call. So I create a vertical spread, and then I might even sell a put also to make that whole options a zero cost to me. I went over that in Celsius. Like, I'll do it one more time and I'm going to head out. But here, I just want to show you what you can do. And I use Celsius as an example. Say I like Celsius, right? Say I'm like, man, Celsius is great. You could sell this put for say 250. You can buy this call for, call it 450. Net would cost me $2, right? Then I can sell this 40 call for 225. Net, I've collected 25 cents of premium because it's 225, 250. That's 475, and this is only going to cost me 450. So net, I'm up 25 cents. My gains are capped at $10 for this. This could be worth 10 bucks. Plus I collect 250 here. So my gains just doing one contract is $1,250. If Celsius by June 25th is between $30 and $20, I would have collected 25 cents in premium and my money would have been kind of dead. If we start trading below $20, I start incurring losses where I'm going to be forced to buy the stock, and it is what it is, but I got to be okay with that. Anything over, so say this closes at $31 on June 25th, I would have made this vertical would be $1, so that's $100, and I would have collected 250, so that's $350. So that's how you can finance, by selling puts and doing a vertical, by buying one and selling one, where you can create this strategy costing you nothing. The only problem is Celsius doesn't go anywhere. You've wasted a lot of margin. You've held now for 216 days and made zero money on your money. So there's pros, there's cons. It is what it is. If you just went ahead and sold 250 and you held this for 216 days and you sold 250, $2.50 is about 10% on your money, right? So you'd collect about 10% on your money. So if Celsius is over $20 by June 25th, you'd collect you'd collect 10% on your money, because the stock is $25, 250, slightly less. Was it 9%? But that's a good return. In 216 days, you'd collect 9% on your money. What are the lowest you could start trading options? I think the lowest is like $1,000, but I do cash secured. So I have the cash to buy this. So if I sell this, say I sell one, I have the cash to buy. Each contract is worth 100 shares. So I would have the money to buy 100 shares at $20, which is $2,000. So I have at least $2,000 in my account when I'm doing this. If you have a margin account, your buying power is increased. So maybe if you only have $2,000 in your account, you might be able to sell 2 of these things. So basically you would earn, if you only had $1,000, if you only had $2,000 in your account, but margin allowed you to sell 2 of these, you would earn 10% on $4,000, because you got the margin, even though you only had $2,000 in the account. So you actually earn 20%, but then there's going to be margin fees and things like that. But it basically times your buying power. But obviously, if this stock drops to $10, you're going to get liquidated. While if you sold a cash secured put and it goes to $10, who cares? You own the stock. If it comes back, you make money. Oh, all right. Guys, I gotta call it. I'm freaking. I actually went over this whole example about an hour and a half ago. But everything is in. Ray is still here. So if Ray was here in the beginning, and you know what, guys, if you want to start talking this stuff like companies and shit like that, I'm in. I love talking this. I love talking this way more than prop firms, but prop firms are fun. It's obviously exciting. But yeah, I would talk this all day in the Discord. If you want to put research, I would love to have a room in there that so no, you could have less than 25,000. You might need 25,000 for a margin account. Honestly, Joe, I have more than 25,000 in my account. So I think though with E-Trade, you need 25,000. You might need less with what is that? Interactive Brokers, or Robinhood. Like a company like that, you might need less. I use E-Trade. Yeah. But I got to go make pancakes. Everyone's waiting for me. I got to make pancakes and some bacon and some eggs. So if you have questions, throw in the Discord because I can take screenshots and help you out much better than just commenting on YouTube. So I hope you guys like this. Enjoy the rest of your weekend, and I'll see you on the stream on Monday. All right. Peace, guys.